China is setting up to do it without U.S. soybeans potentially. Thanks for joining me on the Comstock channel. I'm analyst Brian Grete, and the battle between soybeans between the U.S. and China continues here. And last Friday, on October 10th, President Trump got angered that China increased its controls on rare earth exports and decided to say he would probably not meet with Chinese President Xi Jinping in South Korea at the end of October. That was a new development and put the heavy pressure on the soybean market. Soybeans continue to trade about every headline that comes out on these events and happenings and comments and you name it. But soybeans are caught right in the middle of the U.S. and China trade spat, and so they will continue to react to all those headlines and news stories that come out on this front. But anyway, Trump got angered. He apparently called off the meeting with President Xi, like I mentioned, and then he said he would slap 100% additional tariffs on Chinese goods, and everything escalated through the weekend. And then on Sunday, Trump backpedaled a little bit and softened his stance. The rhetoric got much more calm. And then here we sit on Monday with Treasury Secretary Scott Bessent saying that now that he expects that Trump and Xi will meet in South Korea at the end of the month. And so this back and forth is going on. Meanwhile, the soybean market remains caught in the middle. And so, we don't really know how this is all going to end. All we can go with is what we know for data at this point in time. And what we know is that China continues to actively import soybeans. Fresh data out for Chinese imports from September showed that they imported 12.9 million metric tons of soybeans during the month, and they don't break down the country of origin in the monthly data for the preliminary data, but that 12.9 million tons is the second highest ever on record. And so we know that there were no U.S. soybeans that went to China in September of that total, or if there was, it was very few old crop supplies that would have been shipped and previously booked, but virtually zero. And so China was able to import the second highest total ever from a monthly perspective in September, despite the lack of U.S. soybeans. And so what's that tell us? Well, one, Brazil shipped a whole heck of a lot of soybeans to China during September. We kind of already knew that. We'd known that the Chinese importers had booked a lot of Brazilian cargoes for September delivery, along with October and November. And then recently they booked all those cargoes from Argentina for November and December. And so the Chinese look like they're well supplied as we move through what is historically the traditional shipping season for the United States soybeans as harvest kicks off. And so we're into a period now where the United States should be providing the bulk of the soybean shipments to China, and simply we're not. And yet the Chinese are importing at near record levels. And so that's pretty amazing. If you look over the history of this chart here, China averages about 9.1 million tons of soybean imports per month. And so that's a lot of soybeans that could potentially go out the door from the United States to China as we move through what would have been September through October, November, December, and into January, our historically strongest shipping period. Historically, the Brazilians account for about almost 3/4 of market share for the Chinese market, much more than the United States, and that's been rising even before the first trade war with China in Trump's first presidency back in 2018. But it kind of hit a crescendo at that point in time, and what we've seen is the Brazilian market share for Chinese soybeans is rising, and the U.S. market share has been declining over the past decade plus, and diverging trends there. But I think that as we look at it, China is setting up to do it without U.S. soybeans potentially, not only for the short term, but for the longer term, if that's where these negotiations lead them. They aren't going to back down and just give in to President Trump on the soybean side of things because they need them. They are covering their bases, so to speak. Brazil will be a large part of that cover, but also Argentina, and there are other sources as well. As you can see here, this is the annual U.S. soybean shipments to China, and for the 2025 calendar year, the U.S. has only sent 5.9 million tons of soybeans to China. That all came in the first 5 months of the year, January through May. Nothing in June, July, August, and now September. And so there's nothing on the books for October or November or December or January for that matter. There's nothing on the books for the 2025-26 marketing year, which started September 1st. And so we anticipate that unless there's some sort of a major breakthrough, that the U.S. shipments to China will remain virtually nil in the foreseeable future. Now, I mentioned that obviously China is using Brazilian soybeans to cover a lot of its needs. Argentina, it recently swooped in when Argentina had its export tax removal, and that only lasted about 48 hours, and exporters registered all $7 billion of the open availability that the Argentine government provided there in a very short period of time, and China was an aggressive buyer of Argentine soybeans during that point in time. But now we're hearing that China is open to potentially restarting canola negotiations with Canada. And so there's another source of support or supplies that China is looking to help offset United States soybeans. And so our neighbors to the north, if you look over the course of time here from 2015 to 2024, Canada's averaged about 3.6 million tons of canola exports per year there. And the U.S. is the number one customer for Canadian canola, but China is number two. And so some of that soybean supply from the United States that isn't going to China could be offset with Canadian canola. That could especially be the case if there's more U.S. soybeans held domestically and not exported as much. That means that the U.S. wouldn't have as much demand for Canadian canola, which frees up even more Canadian canola to be shipped overseas. And so we see that in 2024, the exports were almost 6 million tons, 5.9 plus million tons that Canada exported on the canola side. Like I said, the U.S. is the number one customer, China is number two, but we could see some movement around there, and some of that extra canola that wouldn't necessarily be going to the U.S. if the U.S. isn't exporting as many soybeans would then probably be shipped to China and help offset the lost soybean demand from the United States. So this is a very intertwined, intricate situation, but it sure does appear like China is lining up means of covering not only the short term, but maybe potentially longer term without U.S. soybeans if they can't get what they want. I think the situation now versus what it was versus President Trump's first term in office and the trade war there, that time he caught China by surprise and probably got a few more concessions a little bit quicker than what he will this time around. The Chinese are much more prepared this time around. It appears that both in their rhetoric and their actions that they are willing to fight and willing to go without U.S. soybeans by other means as long as they can. And so this one is setting up where it looks like China has more leverage than they did the first time around with Trump. And unless Trump backs down some on his aggressive stance, this thing could go on for quite some time. And it doesn't look like there's a great urgency on China's part to get negotiations done unless the terms are favorable for them. Thanks for listening today on the Comstock Channel. I'm Analyst Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment.